How does accounting apply to your personal finances? I'll talk about that in this video. Hi, my name is Katherine. I'm your accounting tutor and I help accounting majors through graduation and beyond. Personal finance is one of my favorite topics to talk about, so I'm really excited to be discussing it in this video. Just as businesses need to track their income, expenses, net income, cash flow, etc., so do you for the business of yourself. You've already invested a lot in this business for all the time and money you're spending on an education. It better pay off and result in a net income for the business, and the only way to know is to track it. I'm a fan of allocating your money into the future and telling it where it should go instead of looking to the past and see what has already happened. You can't change what happened in the past and how you spent your money a year ago, a month ago, a week ago, even 5 minutes ago, that thing you just bought online. You can't change it. And so I prefer to spend my time and energy on focusing into the future and how I want my money to be spent, where I want it to go. I personally use a budgeting app called You Need a Budget, which helps me do this. I've linked to some of their videos over here if you want to learn more. Back to accounting. Net income is revenue minus expenses and lands on the income statement of a business. In order for the business of you to have a net income, you need to have more revenue than expenses. As in business, that net income then goes to your retained earnings, and you have two options. Either pay it out to yourself as an owner distribution, or you can reinvest it back into the business to help it grow. Your version of paying it out to owners could be a nice meal with friends, a new pair of shoes, or even bigger things like a vacation or new furniture for your house. The important thing here is that you spend the money after it's in your retained earnings, meaning your bank account, you actually have it, and not before you have it. If you spend the money before you have it, you're creating debt, and it's not good debt that would get invested into something like an education. You would just be creating debt on lifestyle expenses, which I love lifestyle expenses, but if you think about yourself as a business would not go into debt for those kind of lifestyle things. So don't do it for the personal business of you either. I'm not saying you can't spend money on fun things, you definitely should, but you should do it with your retained earnings and not by creating more debt. To reinvest your earnings in the business could mean to pay off loans like student loans, car loans, credit cards, or to buy investments. Importantly, the business of you has to plan for something that a traditional business doesn't. And that's a period of 30 to 40 plus years with no income coming in, where you still have to cover your expenses, also known as retirement. If you can invest 10% of the money you earn towards retirement starting in your 20s, you'll be fine for retirement at 65. If you wait until you're older to start investing for retirement, you'll have to save a higher percentage of your income, like 15, 20, 25%, because of the time value of money. That's outside the scope of this video, but trust me, it's much better to start early with a smaller percentage. If you can hit 10% starting in your 20s, and you continue it throughout your whole working career, you really will be fine for a traditional retirement. And if you can check that box, then that's fine. A mistake that I see a lot of people make is that they use those retained earnings on those lifestyle expenses and not into reinvesting into the business of themselves at all. If you listen to successful business people speak, whether it be through books, YouTube, podcasts, however you might hear them, a common thread is that a lot of them reinvest all the early earnings from their business back into the business to help it grow, so that years down the line, the business is bigger, it pays out a bigger net income, and they can then use that to go do the fun things. Same with us. You take that early net income for the first 5, 10 years, not all of it, but a substantial portion of it, a bigger portion than you might have thought about. If you invest those into retirement or even into some traditional brokerage accounts, that's way outside the scope of this video, but if you can take those early earnings into growing the business of yourself through buying investments, then you can have a bigger life down the line, a bigger retirement, or it even gives you options if you want to leave the workforce before age 65, if you want to leave at 60 or 55. If you invest early and get that ball rolling and even increase that percentage, it gives you so many more options. A lot of people talk about the income statement of you with your revenue and expenses, but now it's time to talk about my favorite thing to talk about personally, the balance sheet of your business. The overall categories for your personal balance sheet are the same as in accounting, but I like to think of it a little differently. Instead of assets equals liabilities plus equity, We move the liabilities over here, and it's assets minus liabilities equals equity. Your personal equity is usually referred to as your net worth. The way you find it, just as in a business, you add up all of your assets, the cash in your bank accounts, any investments in retirement. You could even do the fair value of your car if you want to go to kellybluebook.com, look that up. All of your assets, add it together. To find your liabilities, you add up everything, all the debt that you have. Again, be it credit cards, student loans, car loans, medical bills, whatever you might have. Add up all of those together, and those are your liabilities. Assets minus liabilities equals equity. I want you to pause this video right now and go figure out what your personal net worth is. It's really important. If your net worth is negative right now, that's to be expected. Don't freak out. The goal, generally speaking, is to increase that number over time through buying additional investments and also through paying off the debt. So more assets, fewer liabilities, the equity section, your personal net worth, will increase. I want you to find out your net worth as of today, write it down digitally somewhere so you won't lose it, and revisit it every year to check in and see if it's moving in the right direction. And there you have it, a high-level overview of how accounting concepts apply to your personal finances too. If you want more videos like this, diving deeper into this kind of thing, let me know down in the comments, and I'll see you in the next video. Thanks, bye.